Hey, welcome back to the Mortgages AF podcast, and Stuart and I are here for your weekly update on the mortgage market. Today, we are primarily looking at a couple of shared ownership products, but we will have a brief section on the mortgage market overall for those that just aren't interested in shared ownership, basically. Hi, Stuart. How you doing?
Good morning. I'm fine, thank you. Friday, end of the week, a little bit of sun out. Happy days.
It's really nice to do these podcasts at the end of the week because it's just a bit of a relaxing time. We have a bit of a laugh beforehand and stuff, so it's all good. Um, okay, well, we'll get straight into it. Why don't you go through your product first? I'll go through mine, and then we'll have a chat.
Okay, so I've been looking for a client for some shared ownership deals this week, and typically over the last few weeks, the rates have been really high. I found a 5-year fixed this morning, funny enough, at 5.29%, which was like really good news. Really good news.
Yeah,
So
I mean that's
where I'm at.
that's really low. Some people might be thinking they listened to last week, and we were talking about 4 point something interest rate. That's 4 point something percent interest rates, and it's important that shared ownership rates generally are always a little bit higher. That's natural, but for them to be this low, considering a few weeks ago we were looking at the 6%, I think that's really good. So you found a 5-year fixed.
5-year fix, 5.29%. Yeah, which was like excellent. What about yourself?
So, very similar actually. So I found a 2-year fix because a bit of contrast, obviously. Still under 6%, which is the main thing. That's really good. It's 5.59%. We're looking at 2-year fix, 999 fee. I don't know if yours had a fee, but 999 fee, which can be added to the loan, and
Yeah,
£500 cashback as well. So that cashback, obviously great incentive for people to use the product because that's a bit off your solicitor's bill at the end, or it's a new sofa at the end. You know, when you're moving in, that little bit of cashback can really help.
my little boy could spend that on a VR. He'd be happy.
But yeah, exactly. This time of year would be great. Unfortunately, I don't think you're going to get a mortgage to complete before Christmas in order to get your VR. But yeah, I mean, I think it shows that the mortgage market is still coming down. We're still seeing those rate decreases. The shared ownership. If people aren't aware, a brief thing on shared ownership. I don't want to get too into it, but obviously, what is shared ownership? Shirt for the people that are listening that don't know.
Shared ownership is where you buy a percentage of a property. The balance of the property is owned by typically a housing association. It's a great way to get on the mortgage market. Not only for new buyers, but for maybe people who's coming back into the market who's been renting for a few years for whatever reason. Um, and I suppose the really good part of it is your deposit, for instance, it would typically be 5% of your share, so not 5% of the full purchase price. Um, and when you're buying a percentage of the property, your mortgage is going to be that much smaller. Typically, um, mortgages or percentage of mortgages probably could be anywhere between 25 and 60%, depending who the housing association is and your affordability. But the norm tends to be around about 40%. So when you're looking to do a deposit on 40% of a property, it's far less than you actually need if you're buying a whole property. So I think there's been a bit of stigma over years around shared ownership, but for me, it's a great way to get onto the property market.
Absolutely. I think, I mean, it's horses for courses. There's always it's suitable for some people and it's probably not for others, but it is an amazing way to get onto the ladder. Like you say, for people on low income or with low deposit. The other thing is like for people that are at the start of a career, I always think it's a really good one because like your income's going to increase over time, so you're going to be able to buy more shares of that house. Because that's the other thing, right? You can buy more of the property over the time. You're not limited usually to the percentage that you buy initially. So I think for people at the start of a career, it might be an amazing way to get onto a property ladder. I really like the shared ownership scheme, and I think it gets a bad rep sometimes. But I think that's a historical thing, like you say, rather than what it's like today.
Yeah, and I think in certain parts of the country, you're going to see this growing, quite big. In places where properties are like really mega expensive,
Mm.
and you get people as first-time buyers or people want to get back on the market again, that haven't got a massive salary or income at this time. And as you say, people who's coming into their careers for the first time, what a great way to get onto something that wouldn't normally be affordable to them.
Yeah, I think especially with Help to Buy ending a few months ago, it really will really help out.
Yeah.
But yeah, cool. Okay, so just to touch on the rest of the mortgage market then, because we're trying to keep these episodes really short.
Yeah.
So the rest of the mortgage market, what's been going on this week?
Well, I tell you, it's much of the same as last week, to be honest, in the fact that rates are still coming down,
Mm.
and if you look at any posts that's going out there from brokers or lenders, um, everyone at the moment is really buoyant about where the rates are going at this moment in time. Look, let's not kid ourselves. We're not going to get back down to the 1% or below 1%, but from where we were a couple of months ago, it's looking really, really promising.
Isn't it just? I mean, yeah, I think that's the main takeaway. I saw, I haven't looked at all of the rate decreases this week, but I definitely saw one that was 0.78 down on what it was before, which is a massive decrease at any point. So
Yeah,
I think it just shows that they're still dropping those rates down. There's still um, room for them to come down further. I think that it's really promising for the mortgage market in general. I think, yeah, I think it will be a really really good time to buy next year if you're able to. I think house prices will stabilize as well. I mean, we don't know, but you hope that house prices will stabilize and rates will stabilize, and we'll have a good year.
yeah, sounds good to me.
Yeah, exactly. Um, Yeah, I mean, I think that's pretty much everything we wanted to cover off. Obviously, we're trying to keep these short and sweet. One thing that I didn't say at the beginning that I did last time is obviously these products we talk about aren't fit for everybody. They're not a one size fits all, and you should always seek professional advice before taking out any mortgage, especially a shared ownership one. I would say because it is quite complex and it's not as simple as I want that mortgage done. But yeah, I think that was pretty much all we needed to cover off today. It's been a relatively quiet week in terms of what the changes in the mortgage market. Things are still coming down, but there's no drama for once. We've had a lot of drama recently,
Yeah,
but yeah, hopefully rates continue to come down over the coming weeks and months, and we start seeing a bit more stabilization.
sounds good.
Cool.
Look forward to next week.
Yeah. Right, we will try and do another one of these next Friday for you. I don't see any reason why we can't, at the moment at least, and we'll carry on doing them for the foreseeable future as well. And thanks so much for joining us, and we will see you next time. Cheers. Bye.
Good weekend. Bye bye. Bye bye.